This is a Stock Trading Reality Podcast, Episode 5.
I think within the first month of trading, that $2,000 had evaporated into about $550.
This is the Stock Trading Reality Podcast, where you get to see the realistic side of a trader's journey. Get inspired and stay motivated by everyday normal people who are currently on their journey to trading success. And this is your host, who once saw the Disney classic, The Mighty Ducks, 8 times in the theater, Clay Trader.
Coach Bombay, Coach Riley, Goldberg, Charlie. If you do not know who these characters are, then I implore you, go check out Mighty Ducks. It is one of my favorite movies, and clearly seeing it 8 times in theaters as a kid. Apparently, I had really good parents that were willing to take me there and sit through that movie 8 times. So I'm thinking they enjoyed it a little bit too. In fact, it actually got me into playing hockey. I did play 2 years of ice hockey in like 6th grade because I saw that movie 8 times, and then I thought, you know what? I want to play hockey. But not only that, I said, I want to be a goalie. So I was a goalie for 2 years. But if you think trading is stressful, try going and being a goalie in hockey. That was the most stressful sporting event, or sporting position, I should say, I've ever done. I've played all sorts of sports, but for some reason, being the goalie in hockey, that kind of took the cake in terms of being the most stressful. But Mighty Ducks, like I said, if you haven't seen it, definitely go check it out, and I think you're going to enjoy it. Ches, have you seen Mighty Ducks before?
I kind of spaced out. Were those characters from Dumb and Dumber, or is that from another movie?
They were.
We're talking about. We're talking about hockey now. We're talking about hockey.
We're talking about hockey. We're talking movies. We're talking. Ches, what do you want to talk about?
Well, yeah, I played a little bit of hockey myself. But yeah, I saw Mighty Ducks many, many, many times as a kid, but I didn't actually go see it in the theater. My parents just bought like the VHS or whatever. But yeah, I watched it so many times that it started getting, if you watch a VHS too many times, it starts to get crummy and you have to like use the tracking and stuff because the tape wears out. Yeah, I watched it that many times. Really good movie though.
You got to be careful with those comments. I think you just are starting to reveal our age. VHS, some people may have no idea. That's bad. That's really bad,
It's kind of sad, actually.
It is.
My birthday's in 8 days too, so that's you're making me sad, Clay. Because next I'm gonna be talking about how I had a cassette player in my first car. So, jeez.
I mean, I remember the days when hey, what CD did you get? If you said that now to like a high school kid, they would have no idea what you're talking about. A CD? What's that?
Is that an album on iTunes or something? Or
yeah, exactly. Yeah. Oh, it's getting depressing. It's getting depressing. Well, welcome to show number 5, and we have another great guest here today, somebody that has been around for a while, and I've come to know them. Ches has come to know them, and they were willing to spend some time out of their day. They also work a full-time job, and so it'll be another good perspective of, how can you trade and be a trader when you have a full-time job. So we're going to get in, and today we have Richard Davis, and he goes by in the chat room, our inner circle, RD Trader 12, but for simplicity's sake, I'm just going to refer to him as RD. So RD, welcome to the show.
Thanks for having me.
Are you nervous?
No, not at all. That was a nice little introduction there with the Mighty Ducks.
Have you seen that one before?
I have, every single one of them.
Now, I know you're down in Arkansas, so do you guys even know what ice is down there?
Well, we don't have hockey down here, but living in Southern California for a few years, I am a little familiar with the Anaheim Ducks. So
you were in Southern California for a bit?
Yeah, Temecula and Long Beach for 8 years, and then we moved to Arkansas, I think in 96. Yep.
Ches, how far is that from where you are right now?
Long Beach is about an hour and 15 minutes for me. He's much closer to the water than I am, though. I'm in like old people country, California.
Well, that's where you belong. Because what do you call yourself? You call yourself what, the 25-year-old old guy, or?
No, I'm a. You know how people are young at heart? I'm old at heart, but young in age. So yeah, I like to scold little kids that run around, and I try to I sweep the sidewalks and water my grass.
Get off my yard.
Yeah, exactly. That's what I do.
Yell at kids that play loud music and stuff too, if I remember right.
Yeah, Kelly she was like, I can't believe you just said that. But when the kids have summer break, I'm like, this sucks. There's so many kids running around. The pool's jam packed. Like, this is a nightmare. And she's like, do you hear what you're saying right now? Do you realize you're only 25 years old? And I was like, wow, I sound like my grandparents.
Is that when you go inside and listen to your cassette tapes to soothe yourself?
Yeah, and I watch my old stories, my old MeTV black and white television programming. That's what I do.
Very nice, very nice. All right, RD. Well, let's start to pick your brain a little bit here and get into your story. So,
Okay.
a very logical starting spot is probably going to be what got you interested in the markets. What kindly allowed you to pull the trigger and finally start to put some of your money, at work. And what were you doing up until you found, the inner circle in the chat room?
Okay. Well, what initially got me started in the market. Had a business degree from a local university here in Central Arkansas. I had a few fraternity brothers and classmates that worked at a brokerage firm out of the state capital. Around the time the marijuana boom was happening, I actually had a kind of an event that I saw them at, and they started talking about penny stocks and how how much they were running and the gains and the profits people were making off of them. That also coincided with me making a little bit of money in my current job at the time, and I thought, well, I could open an E-Trade account or just online brokerage, put a couple thousand in there, and really kind of dive in and see if I can maybe ride the coattails of the marijuana boom, see if I could make some profits out of that.
Now, that being said, I guess so you're telling me that your friends pretty much kind of hearing about it from some other people, that's what kind of got you introduced or even interested in the market? Was that what I got there?
Yeah, I mean, the only exposure I'd had previously was in college. I had an investments class, and I'd actually opened an E-Trade account once upon a time there. I think I'd put a couple $100 in there, and it was still sitting in a cash position. These friends actually, they work at the brokerage firm, so they're on the phones all day, selling bonds, stocks, things like that. And I got home and did some research for a couple weeks and decided, hey, maybe I can do this myself. I can get an online brokerage. At the time, a job allowed me to trade for a couple hours every morning before I had to go in, and I thought, I'll be able to get in here and make 10, 20, 30,000 real quick. So we all know about those pipe dreams. But
oh yeah.
What you said, you did some research. Mm-hmm. How would you define research? What did your research consist of?
Well, my research consisted of Googling for starters, so you can imagine how well that went. I found several, hot penny stock newsletters. That was also my first introduction to iHub. Really started kind of floating around those boards and thinking, man, some of these people really know what they're talking about, And that was also the first time I saw the name Clay Trader, and they said, all the hate and Clay's group shorting this penny stock down and this and that, and that was my first exposure. Essentially, penny stock, newsletters and iHub. That was the bulk of it right there.
So, in other words, you really didn't do any research.
No, absolutely not.
But
no.
you thought you were doing research.
Yeah, I really thought, I was seeing these newsletters, 1,000% gainers, 4,000% gainers, and I thought, man, this just seems too easy, and I'm usually pretty cautious when I see things that seem too easy, but, I got in, I put, I think I put I got up to $2,000 in my brokerage account, and then I started puppet trading off some, iHub alerts, maybe a few on Twitter at that point, and unfortunately for me, a few of those early ones actually worked out. So then I started to think, well, maybe this isn't, too easy. Maybe this is this easy and I've got this figured out.
So define puppet trading. How would you define a puppet trader, just for people that may not understand exactly what you were meaning?
Well, I'll use an example with the ticker symbol MINE. I know that was probably a lot of them that got people involved in the market, and that was actually one of my first trades. Well, I would see people on the iHub board say, "Oh, it's fell to this support. It's as low as it's been in this month. It's got to come back up. Buy the dip." And there were certain people throwing alerts. Keeping a rolling chart of, there was 400,000 shares bought at this level, and I was thinking, well, if this many people are buying into the spot, it has to be a good spot. These people must know what they're doing. So essentially, puppet trading, I was just following others' alerts, trying to enter when they were entering, exiting when they were exiting, things of that nature.
So in other words, you were not using that thing that sits on top of your shoulders, right? You just were going with the crowd.
Absolutely.
And not to ruin the ending here, but I'm assuming that didn't end up very well for you in the long term, right?
No, there's about two instances in my trading career where I wouldn't call it rock bottom, but it was close, and the first one quickly followed after this. I think within the first month of trading, and this is probably late February, early March last year, that $2,000 had evaporated into about 550. So I was staring down the barrel of, a 75% loss in my portfolio and really not quite understanding how it happened. I'm staring at my account one day. I think I had finally got out of mine for a, 60-70% loss in the current position I had, saying, what the heck happened? How did I lose this amount of money this quickly? So
You said something that I'm very interested in from a psychology perspective. You said you hit rock bottom twice. So okay, you hit rock bottom once, but how did you trick yourself? What happened that allowed you to all of a sudden hit rock bottom again? What? And I think this could really help people, because maybe somebody can relate to the little kind of Jedi mind trick that you played on yourself. Maybe those people listening right now may be falling into that same little pitfall.
Yeah, absolutely. So what I decided to do at that point was to take some time off, and at the time, what I thought was paper trading. I was looking at, I had, Thinkorswim pulled up. I was checking out stocks every day. I'd get home from work and I would do research and say, I see how this ran here, or hit a support or hit a resistance, and it kicked it right down. And what I really wasn't understanding, though, is I'm looking at penny stocks that were very illiquid. I wasn't putting myself in the actual trading situation. It was 100% hindsight. I wasn't looking at, if I'd actually been in the trade, I would not have exited when it crashed. I would have been holding all the way down. So I kind of tricked myself into thinking, well, I can see how this trade worked out. I would have done it exactly like that had I been in the stock. So, and obviously, as we know, that's not the case.
Yeah, the hindsight trap where you go, oh yeah, I would have done this, I would have done this, I would have done this, but then the hard right edge of trading, when it's actually kind of happening, that fear and the greed and all of those kind of voices in your head really come to play. Would you agree with that?
Oh, absolutely. And I'm the type of guy I wear my heart on my sleeve. So, for me to separate the emotions when I actually have real money on the line, as opposed to doing hindsight research, two very different things for me. So.
Yeah, I'm almost convinced that would have is basically a cuss word for traders. Like, that's one of the most evil, because I can totally relate to that. And I never really thought about that until you said that. But yeah, I remember looking back and thinking, oh, wow, yeah, I would have done that. I would have done that. And then I, mentally tricked myself into thinking, oh, yeah, it would have been, sunshine and rainbows and little grandmas with their puppy dogs crossing the street. And then you get out there and there's semi-trucks running over grandma with her puppy dog as she crossed the street. So it just, it doesn't quite work out like that. So you're progressing through your journey, not necessarily progressing in your, what's going on, but eventually, what kind of started start to turn things around for you? Did you have some just massive loss, or, what flipped the coin for you?
Well, I mean, at the time, 2000 doesn't seem like a whole lot of money, but, I'm fresh out of college in December of 2013. So, I'm only a year removed from having my first real legitimate job. So, 2000 at the time for me was like, wow, that was, 5 months of truck payments or 4 months of rent. So I really took some time off, and then I decided, okay, I will, there's a right way to do this. And I know there's a right way to do this because people make a living, and I have to figure out what that is. And that was actually the first time I made it to the Clay Trader website. And it's funny, I saw on iHub, I would constantly see, Clay's group this, Clay's group this. So I went to the website and I started reading your story that you have posted. And what really connected with me, I said, this is exactly what I'm going through. You talk about the emotional cycle of the stock market or a trade. And you went through, your whole kind of early part of your trading career, the ups and downs. And I just realized that everything I read, I felt the same way. I had a connection with your entire story. That was about the time I think I made the first investment in Inner Circle. So that I felt like maybe it's $100, it's or whatever it was at the time, and this is a pretty cheap investment. If it does work out, great, and if not, then it's probably less than I'd be losing in the market anyways. So
yeah, I actually have a similar situation on how I came to it, and just like you said, that $99 over the year, it's hit or miss, and once you kind of got in there, I'm sure you kind of got the same treatment that I did, where everybody kind of realizes that we're not here to throw you fish. You need to learn how to fish on your own. You know, and the puppet trading had to end. So that's awesome that you had realized that. Now tell us about, you know, how has your trading gone since you joined the inner circle? How was kind of the rest of your trading career played out?
Let me piggyback off that real quick, because I want to just get out there, and whether or not you join, you know, the inner circle chat room, that's besides the point. But a lot of people, I think, okay, the career path goes, or the journey goes, I don't know what I'm doing. I join a service, and then it all gets better from there. And that's basically as far from the truth as possible. Just because you join a service, again, whether it be mine or somebody else's, if you think that all of a sudden is going to turn your trading around, you know, that's just not how it works. I mean, Ches, we heard about him in episode 1. He joined, but that didn't all of a sudden turn things around for him, and where he's now, he's not talking to us from the beaches of Thailand right now. I mean, it still takes time. So, you know, I want to establish that kind of too, where, no, it's not a quick fix. So sorry to cut you guys off, but, you know, set up a little bit of context there.
Well, I mean, to piggyback off that, that's where rock bottom number 2 quickly followed. So I joined Inner Circle, and I thought, wow, now, you know, I see these people, and I see the alerts, and I don't really understand what they mean because I have no experience in technical analysis. And, you know, there's some little bit of conversation going on after hours. Well, then I thought, okay, well, you know, I'll just see if these guys really know what they're talking about. And I started kind of following some of the alerts. And I could kind of recognize patterns like, oh, they're alerting this here. It kind of goes up. Well, then puppet trading session number 2 started. So then I thought, well, I would just, you know, oh, they're alerting this. It has to go up. When I didn't really understand if they were scalping, swing trading, you know, day trading. I didn't understand the context because I had no technical analysis background. So I reloaded my account. I think I got up to about 1,500 that time. Within another 3 weeks, we are down to, you know, $500 range. I've lost another 66% roughly. And at this point, I'm just like, maybe this isn't for me. You know, maybe I don't have the head for this. You know, maybe I just don't get it. I don't have the knowledge. And that's when I really started looking at other options, whether it was, you know, I made a decision that I either had to invest in my education and understand the right way to trade, or I was just going to have to get away from it and just kind of put it in my past. So that was kind of a crossroads in my trading career right there. It was pretty much quit or stop and start doing things the correct way.
So you saw these alerts. Were these penny stocks you were playing at that time? What stocks were still getting you in trouble? Okay, still
only penny stocks. Yep.
Okay, so you saw an alert. Walk us through one of those early alerts. What was going on? You saw the alert and then take it from there.
Yeah, I mean, once again, not having any understanding of technical analysis. I mean, I signed up for the Thinkorswim just for the free platform, had some charts pulled up and a few kind of just baseline indicators, and I would see, you know, breakout, you know, NTEK breakout at, you know, 0.2 of a penny or whatever the case was, and I would see it on the chart, and I would be like, oh, okay, I've got to hurry up and get in. I've got to hurry up and get in before it explodes. Of course, I would get in. The resistance would kick it down. I bought all the way at the top, and then I'm sitting there getting out, not being disciplined, you know, 30, 40, 50% loss. Even if it was only a $500 entry, I'm sitting there losing $100, $200, $300 in a matter of an hour just by jumping in, not understanding the situation, the scenario, the analysis of it.
So you're telling me that just because there's an alert out there doesn't mean that you just follow the alert. You mean, are you saying that it's probably beneficial to actually have a trade plan before you go into a trade? Is that what I'm kind of learning here from you?
Yes, absolutely.
Wait, that's how trading works? I thought I was just supposed to follow everything that other people tell me to do. I didn't know that. I'm learning something new every day.
Yeah, exactly. And you know, it's funny you bring up that point, Clay, because, you know, and I'm sure we'll get to this a little more depth in a minute, but as my trading career progressed and I started really investing in my education and spending time to learn, you know, technical analysis and just kind of learn the market better, I realized that if I look at my profits and losses across my career, when that curve turned up and to the right is when I really started to understand a trade plan and an RVR pattern that goes along with that. When I went into a trade with a plan, that's when I started becoming successful. You know, not so much early on. It was more about a break even, but then slowly as time has went and I've fine-tuned that plan, you know, I've figured out a plan that's worked for me. So that was kind of the turning point in my career, establishing a trade plan.
And the tricky part about that is, though, because correct me if I'm wrong, but when you were, you know, before even you hit rock bottom number 1, you probably thought you had a trade plan going into a trade, right?
Absolutely. I fooled myself, I guess you could, you know, like I said, the few early trades I got into worked out, and so trade plan number one was just follow somebody else. Obviously, that did not pan out. I kind of fell back in the same trap before I kind of took the second tank. But what I started tricking myself into doing was doing that hindsight research. That hindsight research, thinking, oh, I would do the trade like this if I was in it, and not understanding the emotions of not really having live money in a trade.
Yeah, so that's kind of that tricking yourself. That's just part of the psychological path, and obviously, like you said, you had to go to the break-even stage before you really kind of started honing and tuning kind of your skills and your plans, and that kind of leads to more profits. So now, a question that we get asked a lot because it kind of determines, in my opinion, how long a trader will either be with us. It will be with us for either the long term or the short term. How has your ability to deal with losses progressed since, say, you started to now? What does a loss kind of feel like for you now versus when you started?
Well, when I started, it was devastating because when I did take a loser, it was 30-40%. As I mentioned, there was no stop losses. There was no structure to my trade. It was, well, I'm going to get in, and if it doesn't go up, I'm going to hold it until I get to a point where I'm just sweating bullets and make myself get out, or it goes up. Now, if I have a loser, I don't even blink an eye, because I understand before I even enter the trade, what my maximum loss will be, thanks to stop losses and actually a structured plan. It kind of took me having some losers to get to there and really sizing down my position until I got to a dollar figure that didn't bother me. Also a dollar figure if I did take a lose on a trade that wasn't going to blow up my account. If I lose and I get stopped out and it's 1% of my account, I'm not going to lose any sleep at night. Whereas to my first, couple months of trading, I distinctly remember PCXG. I lost $700 something on one trade, and I literally had sweat rolling off my face as I'm at work watching this happen. I got out, and what do you know? Not 30 minutes after I exit, it bounces and goes back up. Then I'm sweating even more because I'm like, oh, that's sold completely at the bottom. I panicked, sold, went right back up. Then I'm playing the hindsight game. Well, instead of being down 7, I would only be down 300 if I just would have held it longer. So that made me want to hold trades even longer, which is obviously a very, very bad habit, not a good thing to do in the long term.
So now you know how to, I'm trying to think how I want to phrase this. You can identify a loser, because it doesn't really sound, maybe not make sense, but when you have no idea what you're doing, you don't even know when you're actually losing, because you're actually losing. It's more than just, looking up at my screen, I'm technically down, 5 cents, 10 cents. But how do you know now that you're actually losing? Because there's things that go into it. And, does that help you? Because I know the answer to this, because I know you do know when you're losing. But, does that makes your life, there's no beads of sweat, are there?
No, absolutely not. I mean, you take last week, for example, I had a really, really bad entry on a Netflix put option. Sat right there. I could definitely see it kick off the resistance. I kind of had probably not the best entry. And as I saw it coming down, I knew if it came down and hit my stop loss, that was going to be, roughly an 8% loss, which is what I had my stop loss at. It triggered, and I didn't bat an eye. I was already on to the next thing. It doesn't even become, not to steal your term, but you almost become robotic. I understand when I hit that buy button that if it goes south, worst case scenario, I know exactly what I'll lose, and I accept that before I even enter the trade. So
Go ahead.
No, it just there's no accepting that and understanding that even before anything occurs. I know the consequences, regardless, and I have, obviously I'm set up now to where it's not going to be anything that's detrimental to my account, and I can completely accept that.
But you're wrong, man. You're wrong. You got the trade wrong. That makes you a crappy trader, doesn't it?
Well, not necessarily. I think that anybody that does this long term is going to have to accept the fact that you're going to lose. I mean, no one in
say that again. Say that again, please.
Yeah, I mean, anybody that wants to be a trader, whether it's even short term or long term, you're never going to be 100%. You're going to have losers, and when you accept that and understand how to handle those, it'll just put you that much farther ahead of the game.
Sounds like you got a quote for the show notes there, Ches.
I want to press this a little bit though, because I knew right from the beginning. I read a Mark Douglas book, and I knew all about the psychology of trading right when I started. And I actually read this book before I did any real trading, and I was like, oh yeah, sure, I get all this. and the psychological want to be right is just so strong. And I always thought, I said, oh, I'm not here to prove I'm right. You know, I have no problem saying I'm wrong. But really, I realized that my subconscious always wanted to be right. And that was like a huge turning point for me when I realized that there's no way for me to predict which way the market's going to go. I never know. That's not how, trading is. It's understanding that downside. But yeah, the psychological need to be right. Obviously, it's kind of hammered in, you go to school, you need to learn things, and then you're either right or you're wrong. Or you get, a C and you're average. Mm-hmm. So yeah, trading is such a different kind of, it's structured so differently than kind of, I'd say, any other job in the world, in the sense that, it's not about always being right. You can't be right all the time. And I think a lot of people struggle with that. And that's what leads to them holding and, racking up those massive losses, is that desire to be right. So yeah, understanding that is a huge part of kind of, turning your trading.
Well, there was one thing. There was one thing in particular that really helped me get over the hurdle that you just mentioned. The RVR course, when once again, not trying to just throw a promotion out there, but when I invested in my education, I kind of started understanding what I was doing, but I didn't understand how to structure a trade. What was my risk? What was my cost analysis of this trade? When I kind of figured out an RVR strategy where I knew I could lose over 50% of my trades and still make money long term, that's kind of when the light bulbs went off on my head. That it's okay to lose, because as long as I have my ducks in a row, I have my trade plan, I can lose 50 to 55% of the time and still make money. And when I kind of came to that fruition, it really hit me hard and said, okay, I can accept this. I can accept losers so much easier now, knowing that in the big picture, it's not going to change the final outcome as long as I stay disciplined and stay structured.
No, this is good stuff. Preach it, brother. I'm just sitting here soaking it all in. And it's funny just because the way to go back to kind of Chez's point and just on topic here, but, I've done research just because how does the human mind work? And us as humans, we're very protective of ourselves. A practical example is you take a test in school. You get all the questions right. Yep, I'm smart. You take a test in school. You don't do so good on it. What a cheap shot by the teacher. She never covered that in class. He never told me to put that in the notes. What do you start to do? You start to blame somebody else. You don't want to ever admit to yourself subconsciously that you're actually wrong. That, hey, maybe the teacher, you just didn't study hard enough. Maybe you just didn't put in the effort that was required. And maybe at the end of the day, the topic here is you were wrong. And if you have somebody, if you're a big egomaniac, if you think always need to be right, if you think that being wrong makes you stupid or makes you not good at what you're doing, then I think RD summarized it pretty good, where he doesn't need to win that often. He can lose quite a bit, and he can still, in the long term, that's the key word, long term, the trend is going to go up, and it's not black magic. It's just managing risk and understanding that keep losers small, admit defeat quickly, and then when you are in the zone, just let those winners work for you. So I'm trying to think, are you in stocks or are you doing mainly options right now?
Now I've completely transitioned to options 100%. So when you release the options course, and I penny market had pretty much dried up at that point, I had to change my work schedule, which allowed me to trade more. And I really started to understand the power of options. I have a smaller account, so the fact that I could get a little bit around the pattern day trading rule with the T+1 on a cash options account, that was a big, kind of a pro for me to switching to options. And then the fact that, the options markets on the big board stocks are very liquid and they're very fluid. And it's really gotten my attention. I've had, a decent deal of success in starting the options trading, and that's what I'm dedicating 100% of my time to right now.
And just a note there, he mentioned getting around the pattern day trading rule. If you're interested in that, I don't want to go into too many details here, but there will be a link in the show notes that you can find at claytrader.com/podcast episode 5. And that'll take you to a video that I did showing you how you can get around the pattern day trading rule that really is a thorn in the side to so many traders. So I know you just touched on this quite a bit, but if I said, look, RD, give me one reason why options are more preferable to penny stocks. Because, hey, I'm told penny stocks, that's where all the big gains are. That's where it all happens. But, give me one or two. If you had to make if this was a court of law, what would be your arguing point in terms of penny stocks versus options?
Well, my arguing point would be you have the same gains, if not more gains, on a more reliable basis with options than pennies, and they're liquid. The main problem with the penny market for me was I was getting to illiquid penny stocks. I could definitely buy, but I could not sell. It was kind of like
Say
finding
that
a needle in
again.
the
Say that again. That's a crucial point there that so many people don't understand about penny stocks.
Yeah, I mean, it's very easy to buy into the stock, but if it starts to go, if it starts to fall or you want to get out, the spread may be huge. There, you may not be able to get out in the amount of shares you have, and you're taking a bigger loss than what you wanted to, even if you were structured, just because there's illiquidity for that ticker. So with pennies, the market's much more liquid. The charts are much more fluid. With the volume for technical analysis. Also you're trading options on more reliable companies. Big boards that, if you get into Apple at 125, there's not a big risk of it just plummeting 40% in 5 minutes. It's just it's very improbable that that's going to happen. So, and like I said, it's not like trying to find a needle in the haystack with options. There's many good option markets out there for many tickers every single day, as opposed in the penny market where you may pull up the scanner and go 3 days without seeing something that's either running or has enough volume for you to even hop into.
So you're saying you would rather trade based off an Apple chart compared to a chart based off of Billy Bob's Crab Shack?
Absolutely, 100%.
Are you telling me that Apple isn't run out of a van that's parked under a bridge down by the river? Is that what you're telling me?
Yeah, I mean, I'm pretty sure based on the size of the company that they have a little better operation than a van under a bridge. But these other penny stocks that I've traded, and I'm guilty of trading them for 10, 12 months. But I couldn't tell you if those companies even had a real building. So I really looked at kind of where I was putting my money. Obviously witnessing some very severe pump and dumps as well. It's a lot higher risk in the penny world, and for the same, if not better gains and more reliable gains in the options market, it's kind of a no-brainer. Then you throw in the T+1 if you are trying to get around the pattern day trading rule, and that's just a huge pro for people with small accounts as well, like me.
Yeah, I'm also a huge fan, and I was one of the first guys, not to take a bunch of credit, but yeah, I was happy when Gator and I kind of did some research and found out that was a good way for me to kind of still actively day trade with these guys with a small account. So that was like a huge lifesaver for me. But now regarding
I want to cite my source here. I did mention the video I did, but to give credit where credit is due, I did form that video based off Chez's piece of information. And then also Gator, who was we interviewed in podcast episode number 4, was kind of the Chez Gator combo that opened my eyes. I didn't even know about it until they brought it to my attention. So I don't want to come across like I discovered all that stuff. That was totally Chez and Gator. So
it's okay. You were scared of the iron butterfly, triple backflip, McDouble option strategies. So that's okay. We kind of opened up your eyes to.
Is that the one with the iron otter eagle?
Yes. It's got about 7 legs, and it looks like this weird mutated animal that came near a nuclear plant. But back on topic here, Artie. So what are your favorite type of strategies right now? What do you what does your personality lean you more towards? Is it breakout trading, pullbacks? What's working for you right now?
Yeah, I mean, I'm keeping it pretty simple. I mean, just single put, single calls. I'm not doing any kind of complex option strategies. Definitely, buying, not selling premium right now. I like cliff points. I like breakouts. Those are two that I kind of gravitate towards. I will do some, certain patterns, obviously triangles, wedges, flags, just the real basic things. I mean, right now I'm having a pretty good deal of success just keeping it simple like that. So until I expand my knowledge and get comfortable kind of playing around with other strategies, I'm probably going to stay right there where I feel comfortable.
Hey man, if it ain't broke, don't fix it. So
exactly.
Yeah, you don't chase any shiny objects. What about indicators? Do you have anything that you really lean to, or where are you at kind of right now with that?
Yeah, I use, and it's funny. Back when I was trading pennies, I had about 14 million indicators. It seemed like I couldn't even see my chart because the rest of the screen was filled up with indicators in the bottom. But I keep it pretty simple now. I mean, obviously, the volume average are the first thing I look at. I use either an 8 or a 9 SMA, the 50, the 200, and of course, I always have the Bollinger Bands up as well. I use an RSI 5 at times, and then I also use the RMI indicator on TOS. I've gotten really comfortable reading that RMI indicator.
What's the
And
RMI?
that's the relative momentum index. That's actually, I give credit to MD Trader for teaching me that back in the day. But it's just a relative momentum index. I've only found it on TOS, but just me and Gator had this discussion the other day. It's just whatever you get comfortable reading, whether it's the MACD, the histogram, the RSI. I've gotten comfortable reading this RMI indicator, and so I just kind of stick with that since I've kind of obviously gotten very comfortable with it. So, I mean, indicators, let's keep it pretty simple there, too. I've really cut down from the past.
Would you agree, because I asked Gator this last episode, that at the end of the day, pretty much price action, meaning candlesticks and volume, are those your two kind of primary go-to weapons?
Yeah, it's funny. If I know you remember, Clay, I don't send many emails, but you'll probably recall I sent you an email. I think it was towards, it's summertime last year. I was really struggling. I'd really started investing in my education, and I had all these indicators pulled up, and I distinctly remember I sent you, we had a conversation about this. I said, I have all these indicators up, and they're all pointing this direction, but the price, still isn't doing that. And you had one response to me. You said, volume is king. Volume is always going to be king, especially in the penny world. And, since that day, it's really stood out to me, where the volume is, that's my number one thing. I like the volume with the 50-day volume average or 50-period volume average. That is the first thing I look at in most situations. If it's a bull breakout, is there volume to support it? If it looks like a consolidation, is the volume on the decline and smaller? So I find volume to be almost probably the number one indicator in almost all scenarios.
Well, yeah, I mean, at the end of the day, right, you summed it up perfectly. You can always buy. There's always people willing to sell you shares, but is there anybody ever going to be willing to buy yours when you want to sell? So, yeah, if you're just getting started and listening, volume, 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 especially if you're in penny stocks, because you can always buy, but you may not be able to sell. Now, I got an email from somebody saying, hey, I'm enjoying the podcast, but why don't you ask some people more about kind of routines and stuff like that? On episode 2, we learned Hooch just rolls out of bed and shows up at his monitor like 30 seconds before the opening bell. But for you, do you have any sort of routines, rituals that you try to do before each day? Do you maybe do homework at night? Or, kind of walk us through how you approach each trading day.
Yeah, it's kind of twofold. Before I did options, I really didn't have a routine. I was pretty similar to Hooch. If I could grab a cup of coffee and sit down before the market bell opened, I was doing good. Nowadays I like to get up, probably at least 30 minutes before the market opens and kind of get a feel for what's going on. Now that I'm kind of involved in the big board world, you can kind of see is there a bunch of gap downs, gap ups, I'm starting to kind of teach myself a little bit about futures and kind of getting a feel for the market before the bell. And then the other side, the second fold there would be homework at night. Especially now with the day job, I get to trade, mainly in the mornings for about an hour and a half or a 2-hour period. So if I get tied up with work the rest of the day, usually in the evenings, I will either spend time, either going through some educational materials, some of the courses, just kind of reaffirming that foundation in my head. I try to watch 1 or 2 a night, and then I also review a few main tickers that I follow that I try to AKA get romantic with. I try to follow them, make sure I didn't miss anything during the day. So that's really all I do as far as outside of trading, preparation and homework wise.
We'll make a link to that in the show notes too about getting romantic, so that way people don't think this podcast is getting perverted in any way. I promise that's totally innocent comment. Again, you can go to show notes and check out that video. So at this point in time, I mean, we know you're still progressing towards your ultimate goal of being a full-time trader. If I said, look, give me some of your strengths and weaknesses, what are you thinking in regards to that?
Well, I'll start out, with the strength. I definitely think that my dedication to my education, and I mean, I know that sounds a little corny, but really when I started doing the research, paper trading was a huge asset to me. When I really started putting myself in these situations, that is definitely a strength of mine, really investing and studying and taking the time to learn. The biggest weakness for me is emotions. I've struggled with this from the get-go. Just naturally as a person, I wear my heart on my sleeve, as I said. But when I get into a trade, it's hard for me not to get that adrenaline rush when I first get in, even with a structured plan. I really had to back down my entry size almost to the point where I didn't care, $100, I buy one $80 option. I just had to practice doing that till I got to where I didn't care, didn't let my emotions even come into play and kind of build from that. So that's definitely my number one weakness.
Yeah, you got to be comfortable with the size. Somebody put it to me in kind of similar terms that you need to be at peace with the trade the minute you put it on. You should just expect that you've lost that money. So, especially in the options world with how expirations and all of that work, that things like that can't happen if you're going to hold through an expiration. But we really do appreciate you being on. We're going to kind of take this into some final fun questions that aren't specifically trading related. Clay's most important question here that he has it huge and bold and in size 40 font is, what is your favorite movie?
Hands down, Legends of the Fall.
That is a
Pitt.
great movie. I'm going to cut
Yes.
you off right there. That's a great movie.
Yep.
Have you seen it, Ches?
No, I haven't, so I got to
What?
add it to a list.
Ches, do this. Do this for me. I want you to move to either North Korea, Cuba. What are the other communist countries out there?
I want to go to Siberia. Just let me go to Siberia.
You can go to Siberia.
All right.
Hey, RD, you want to be the new co-host until Ches sees Legend of the Fall?
Yeah, I'll see if I can fill in for a little bit. It is a great movie.
Oh, yeah. That's for real, though, Ches. You need to go see that. You and Kelly make some popcorn tonight. Tell her, hey, baby, we're going to watch Legends of the Fall tonight.
Hey, baby, we're going to watch some Legends of the Fall tonight. That's what I'll say to her, and she'll be like, what are you talking about? She's probably already seen it, too. She sees a lot more movies than I do.
Well, she's probably going to break up with you then when she hears that you have not seen it.
Probably.
All right, RD, what kind of food do you like? Favorite food and favorite dessert?
Oh, I mean, I'm kind of a fatty, so favorite food. I mean, I do just like a good cheeseburger. I know that sounds pretty generic, but we have a couple good burger spots down here. I will say, as far as Southern home cooking, my mom makes a poppy seed chicken dish that I beg for every time I go home. So that would be my other favorite. Dessert, I actually like Twix ice cream bars. And if you've never had one, go to the store right now because they're that good. They're that good.
Now, what is your favorite song or band or just musical group?
I don't really have a particular. I mean, it's more about my setting. If I go, I'm a big outdoors. I hunt and fish quite a bit. So if I'm out there, that's always country. If I'm in the gym, it's usually, some hard rock, maybe a little rap. So just a nice mixture. I don't have a particular band that I'm just, big on.
I mean, are we talking hardcore rap here? What kind of rap music? I mean, it's changed over the years since I was since Puff Daddy days. I mean, who are the rappers out there right now?
Yeah, I mean, definitely, you have your standards, your Lil Wayne, your Drakes, 2 Chainz, things like that. And then, I'll mix that in with some Metallica and some of the rock from, probably the late 80s, early 90s when I'm working out. So,
Do you like country at all?
oh yeah. Like I said, when I go back home, I hunt and fish quite a bit. I'm a pretty avid bow hunter. It's always country, 100% when I leave my town here, the big town of Conway, which is about 60,000 people. So
Nice. So, if you leave, you've, I guess, already been out to Southern California, but where would you like to visit someday?
Australia. It's actually a trip that, obviously we're not close to taking it, me and my fiance, but somewhere that we both really want to go, and we will take a nice long trip out there one day. I just think the culture's interesting. The wildlife out there just really intrigues me, and definitely would like to take a visit.
Now, if you could meet one person, dead or alive, who would it be?
That's a tough one. There's not just one person. I mean, I think I would like to hang out with the day, if that was the question. Definitely Rob Dyrdek, because I just think that guy would be I think if you hung out with him for one day, you would never forget it. There's no telling what you would do. There's no telling what would happen at the Fantasy Factory. I think if I could hang out with him for one day, I would remember it to the day I died. So
Who?
Rob Dyrdek. He's the guy that started the DC Shoe Company. He has several shows, Fantasy Factory, and
He's a skateboarder, Clay. All
Yeah.
those hip hop kids, doing that skateboarding stuff.
I'm not
Hey,
even
get
a
off my
skateboarder.
lawn.
Yeah, I mean, I'm not even a skateboarder, but when you watch his shows, they just do the craziest stuff, and he seems like a good guy. So I think I'd really enjoy spending the day with him.
That's pretty sweet. I think because we plan on asking future guests this question too. I think that's probably going to be one of the more unique answers we get. Because I'll be honest, I guess I'm old. I had no idea who that was. So we'll wrap things up. But 2 more final questions for you. First, 3 words. If you were to think of successful trader, what do you think 3 words would be attached to that?
The first one, hands down, is being disciplined. That's key number 1. I think that's one of the main things long term. I would say being disciplined, unemotional. I think I'm just going to stick with those two because those two, I have those actually almost written on a sticky pad in front of me every day to stay disciplined and remain unemotional. Now, if I try to achieve those two things every day, I think I'm doing all right.
Nice, nice. And finally, if Ches gave you access to his time machine and you could go back to when you first got started, what would be that one bit of advice that you'd give yourself?
It'd be twofold. I would say paper trade for 6 months, however long, till I was comfortable, and forget the penny world and start with options. That would be my 2 bits of advice for historical me.
Those are some pretty good pieces of advice. If I had to, if you gave me that advice, I would definitely have put in a lot of strength into it because I wish somebody had told me the same thing. But we really do, like I said, appreciate you coming on. This story was awesome. And where can people find you? Either on Twitter, Facebook, or in the chat?
Yeah, I mean, in the chat and on Twitter, the handle's the same. It's RDTrader12. I'm on Twitter all the time and obviously in Inner Circle. You can send me a message, and I'm usually pretty quick to reply.
That is awesome. And again, RD, thank you for being on the show. Thank you for taking time out of your day. You're a valuable member of the group, and it's been fun to see you go from kind of running around like a chicken with your head cut off to now just putting together trade plans that make logical sense. So it's amazing what your hard work has done. And so good job and keep it up. And again, thanks for being on the show.
Absolutely. Thank you guys very much. I enjoyed it. So
awesome. Well, if you enjoyed today's podcast, I'd like to ask you to do a few things. First, if you're watching this on our website, click one of those share buttons up at the top. If you're listening to this on iTunes or one of the other platforms, please leave feedback, some review, and just let us know what we're doing right, what we're doing wrong. This is obviously only episode number 5, so we know that we can probably improve. So we're all for that. But if you want to reach out to us, you can reach me at clay@claytrader.com or ches@claytrader.com, or just go to claytrader.com/contact and submit a form there. And we are here to help. We do respond to emails, and it is us. It's not some virtual assistant off in some foreign land. It really is us, and we like to hear from people. We like to hear from those that maybe want to be a part of the community. So get in touch with us, and we'd love to answer any questions you may have. So thank you for spending your time with us, and we look forward to being back with you for episode 6.
This has been the Stock Trading Reality Podcast. Thanks for taking the time to hang out. To learn more about Clay and the Clay Trader community, including the trading team, premium training, and more, visit claytrader.com.